Bing, bing, bing. Welcome to the Freemium Podcast today. Hope everyone's doing well. Shem, sorry I'm a little bit late. Mr. Victor Levee.
Hey,
Happy for you to be here today.
thanks for having me.
So today's guest is Victor Levee. He works in group insurance. He has his own business in group insurance. And we're going to talk all things group insurance. I think it's going to be good. Today's podcast, I want to have a little focus on, we'll talk about other things, of course, but on the group insurance side. So whether you're a small size business, medium size business, large size business, but there are a lot of businesses that don't, especially startups, they don't offer group insurance. Most of the time they can't necessarily afford it, but it's, we can get into certain things, how it's a nice little extra perk. Like in insurance, it's in home and car and business insurance, it's standard to offer group insurance to your employees. And if you're not offering group insurance, it's actually all of your competitors do it, so you kind of have to do it. But it's also a nice perk. It helps with employee retention. It helps with this, helps with that. But these are all things we can cover today. Before we get started, I just want to ask, how are you doing on this beautiful day?
This is amazing. Like, we got a couple of days of summer left. It's really great. It feels good. It's very warm out there.
Yeah,
not complaining about that at all.
Nope.
But just to keep this on the group insurance thing on track. There are two aspects of my business. Today, we're going to be talking about employee benefits, the group insurance angle, if you will.
Yeah.
And there is so much to talk about. And hopefully we can get together again and I could talk about the other aspect of my business, which is using individual products to provide financial security protection for my corporate clients as well. But today is all about group insurance and all of the different ways in which group insurance can be offered to employees, with the understanding that these kinds of programs are unbelievably misunderstood and often oversimplified. Well, I need a health plan. I need a dental plan. Yes, you do. But you've got to balance that against risk. And risk is a synonym for cost.
Mm-hmm.
So we've got to look at that all the time.
Yes.
And in your business, you understand risk mitigation. It's super important.
Yes.
It's the same thing in the insurance game.
Yeah.
But there's other aspects to group insurance plans that are unfortunately overlooked. And those are more along the lines of the life insurance product that's often associated with a group insurance plan, disability insurance product, critical illness insurance, and also catastrophic loss or catastrophic claims. You'd be more familiar with the term stop loss insurance, as they say. That's the kind of thing that really makes the difference between the structure and planning in one kind of a group insurance plan versus another. And it's available for groups of 3 people. If you want to define a group of 3 as an insurable group, you can have a group insurance plan for as little as 3 people.
So before we get into all this, though, I have a question for you. This is the first question. How the hell did you get started in group insurance? Why did you get started in group insurance?
Well, that started a couple of days ago now. And coming
wow, you really know a lot.
Yeah,
you only started this a couple of days ago.
I know.
Wow,
it's pretty good. Impressive. Pretty good. Yeah.
Are we speaking to ChatGPT right now? I don't have all this knowledge. Jeez. All right. Cool.
The insurance industry and I got together nearly 45 years ago. And
you told me you were 40 years old, though. How is that possible?
Yeah. Well, there you go. It was the first 5 years was a dream.
Okay.
And the first area of insurance that I got into, much to the chagrin of my regional manager at the time, because back in the day, we were in regional offices, we had managers, and they pushed you to sell individual life insurance products, and number of sales was hugely important. For those of you who may be listening to this that remember me from those days, you'll know exactly what I'm talking about. That was then and this is now. But I was always involved in working with businesses. My previous life, that prior to the insurance business, I'd been in advertising, marketing, and sales promotion.
Interesting. I didn't know that.
So I'd always been working with entrepreneurs. I'd always been working with creative people. And it just felt more natural for me to talk to business owners.
Mm.
And so the group insurance product and the services associated with it became a natural segue for me into the business. So that's how it really started. It was kind of a...
Why didn't you want to stay in marketing, just out of curiosity?
Marketing at that time didn't appeal to me. It was difficult because what I realized later on, what the conflict was the values. Everybody's an expert in marketing, although that hasn't changed necessarily very much the group insurance market.
Yeah.
But in marketing, it became whose ego was bigger. And I was really concerned about what I was doing in terms of really bringing value and bringing something that was valuable to people into the market. And it just didn't set well with me. I got into the insurance business and it became a perfect match.
It is true, though, that with marketing, it's very difficult to put a number on. It's very difficult to put a specific number with regards to the return on investment for marketing. So you could do that in paid advertising today, online paid advertising, so you can see your conversions and stuff like that. That's a lot easier to quantify. But when you're running a brand awareness campaign, or you put a billboard up on the side of the highway, or you run a radio ad, or you run this, you run that, it's very difficult to count the return on investment. And I've always found that interesting with marketing. It's tough. I'm always like, am I really getting my money's worth for what I'm paying right
exactly
now? And a lot of businesses ask the same question.
How do you measure your ROI? How do you get a measurable bang for your buck?
Yes.
A lot of it is exposure. I mean, you take any one of them, the major brands out there. As an example, McDonald's.
Yeah.
At one point,
yeah.
I heard a statistic where every 7 seconds you saw a McDonald's M.
Yes.
So that becomes interesting in terms of exposure to a brand, which can create a buying habit.
Mm-hmm.
But the best marketing strategies that I've ever seen, and some of the ones that are the most fascinating to me, are the ones that were launched by basically you and podcasts.
Yeah.
No. By Apple.
Yeah.
Apple is brilliant.
Wow. Yes.
If people want to think about it in a cold, harsh reality, Apple has created a need that people didn't know they had. I mean, the first time we saw a camera on a telephone was an iPhone, and it just exploded from there. And so that became an interesting kind of a way to build marketing programs that were successful. But apart from that, branding, brand awareness, everybody talks about that today. Brand is extraordinary. The brand that you've created, it's absolutely remarkable. How have you done that? Well, you've exposed the world to your brand.
Yeah. What's your opinion on the commercial, the Super Bowl commercial? I think it was in 1984, the Apple commercial, the notorious where the woman's there and she throws an axe at the screen, the movie screen. You don't remember this ad? No? Oh my God. This is like the Apple advertisement that put them on the map.
This was the moment where they became different.
Yes.
Because they broke the mold.
Yes. So you do remember the advertisement. Okay.
Exactly.
Yes.
That's the thing. They broke the mold, and it was extraordinarily visual, but at the same time, it was very impactful, and everybody got that. Everybody got that.
Yeah.
So
you would have just gotten into insurance when that advertisement came out. So you were already working in insurance?
Yeah, I was in the insurance business at that point.
But you still had the marketing. You still had the marketing mind.
Oh yeah, I still have the marketing mind. I still do. I mean, look, I'm doing a podcast right now.
So what do you do for marketing right now? I'm going to go off the cuff right now. We'll get to these questions later. So what do you do to brand yourself as a business owner?
That's a very interesting question, and it's often asked in different ways. But at the end of the day, what we're trying to do here is work with existing clients and create a situation where my clients become my ambassadors. Mm-hmm. If I do a good job for a client, then the client will usually give me a hand in terms of referrals, in terms of introductions. If I do a bad job for a client, and it does happen, there are usually very specific reasons why. And I will often take the time to work with the clients to find out what those reasons are so they're not repeated. and so that the air is cleared, if you will.
When you're getting, so basically, if I can say it a different way, what you just said, you rely a lot on word of mouth referrals, correct?
Yeah, it's referrals. A lot of it is referrals. A lot of the time it has to do with who I'm working.
Yeah, well, that's how we started working together.
Yeah.
How will you, so let's say you get a new client or you have an existing client you've been working with for X amount of years, you guys get along. Will you specifically ask them, say, hey, do you have any referrals that I can contact? Can you put in a word for me? Or does it kind of just happen naturally? Because there are some salespeople that will ask for a referral quickly. Some let it come to them. What's your style?
I have to earn the right to ask. And sometimes it comes to me. Sometimes it's a very natural part of the it's always a very natural part of the conversation. But I will never ask for a referral until I'm comfortable with the fact that I've earned the right to ask for a referral.
So if you just made a sale and you've been working with this person for 1 week, you're not going to be asking for a referral from this person because you haven't proved yourself or you haven't had the opportunity to prove yourself yet.
There's got to be a lot more going on there's got to be a lot more of a dynamic going on. And in my business, you can get deep and you can get heavy, even in group insurance, pretty quickly. All you need, I mean, everybody has a claim or two, but all you need is a disability claim. All you need is a death claim. All you need is a critical illness claim. And let me tell you something, you're face to face with the realities of what's really important about the insurance product. And that can happen very quickly, can also take a while, but the programs that are set up are always built around those values. So the relationship will come within 2 to 3, 4 months.
So can you talk about some claims that, without naming names of clients, but can you talk about some claims that you've seen for some of your customers?
Sure. I just have to make sure that I'm very discreet about this. Yeah. But there are 2 areas where claims become shocking in the sense that most people don't realize they're claims. Let's start with the easy stuff first. If you have a drug claim, you go to the pharmacy, you get it paid. Thank you very much. It's somewhere between 80 and 100% gets covered. Yeah. You have a dental claim, you go to the dentist, you have your filling, you get somewhere between 80 to 100% of it covered. Those are more cash flow claims. But where the rubber meets the road is when you have claims that people don't necessarily consider or think about in the context of group insurance. There was a situation about 4 years ago now where I had implemented a group insurance plan in a small group. I think there were 30 or so employees in this group. I put the plan into place and I actually insisted that they include a group critical illness benefit in the program. So everybody in the company got a flat critical illness benefit of $25,000. No questions asked, no medical. The product that is in place has certain risk mitigation features in it. But for the most part, everybody got their $25,000 of critical illness insurance. 1 year later, in the space of 5 months, there were 5 $25,000 critical illness claims in a group of 30 people.
How?
There were 2 heart attacks.
Oh my God.
2 cancers within the employee population, and then 1, I believe it was another benign tumor. But because of the positioning in the tumor in the head, behind the eye, it actually resulted in a critical illness claim. Within 5 months, there were 5 claims.
And so for the critical illness, correct me if I'm wrong, one of my employees gets sick, they can't work for 6 months, let's say, this policy would pay out to that person $25,000.
The perfect segue, Curtis, because part of the critical illness question is, well, why do I have critical illness if I've got disability insurance?
Yeah.
Because the disability insurance is an income replacement benefit, and that's designed to be able to pay out over a much longer period of time and could be a much higher amount of payment. If you have a disability benefit that would pay you or an employee $3,000 a month, that's $36,000 a year. If a disability claim lasts 5 years or longer, that's a hell of a lot more than a $25,000 critical illness claim. So what happens is the disability claim is for when you're incapable of doing your job that you've become accustomed to doing, or you have experienced by reason of training, education, and experience in doing. Okay. For the most part, that's a very, very general definition of disability insurance. Whereas a critical illness claim is going to be if you're stricken with one of 25 or 26 life-threatening illnesses. So if you use the example of cancer, you can have a life-threatening cancer, but you can still work. And at some point, sadly, you may not be able to work anymore. And that's when the disability would exactly.
Got it.
But you'd still have your 25 grand tax-free to modify the house, take care of the family.
Tax-free?
Tax-free. Yeah, it's all
How?
tax-free. Boom, tax-free.
Just
You can sell out on an individual basis too, which has massive repercussions if it ever has to be claimed.
would you say that group insurance has changed since when you started versus today over the years?
Not in the slightest,
It has not.
but everyone has tried to spin it like it's different. But at the end of the day, it's a very important part of the compensation package
Yes.
that an employer will offer to his or her employees. It is a, it is a benefit that has always and will always pay the things that are very visible, the drug claims, the health claims, the paramedical claims, that's the physiotherapy, osteopath, chiropractor, etc. Dental claims, if you have a dental insurance plan. Those they've always been there and they're always going to be there. The thing that's changed in the insurance business is the way those plans are structured and how they're designed. Because the one thing that has evolved is the cost of medical care. The very first plan of group insurance that I sold, which was quite literally 45 years ago, the family rate, the total family rate that was charged to the company that was split 50-50, the family rate was $37 a month.
Oh,
$37 a month. Today,
I wish it was still like that.
today you're looking at anywhere between, depending upon the structure of the plan, $200 to $400 a month.
Okay.
Exactly the same plan. Now, if you run the numbers, and I'm not good at numbers, which is kind of ironical in the fact that I'm in the insurance business.
Yeah.
But anyway,
anyone who works in insurance, he
yeah,
goes
exactly.
numbers. And,
we have actuaries for that.
yeah, exactly. We just sell the product.
Yeah, we
I don't
exactly.
even know what insurance is. I just sell it.
We got a numbers guy behind me going, "No, Vic, you can't do that. No,
Yeah.
Vic, you can't do that."
Yeah.
But I do it anyway. So yeah, the numbers have changed quite a bit.
Yep.
So the importance of risk management may be heightened, may come to the forefront a little bit more. But at the end of the day, it comes down to values. It's what do you want to offer your employees? What are your employees looking for? And what does the population need? And you can find a balance between those three.
Healthcare today in Canada is in the gutter. And what I mean by that is it takes forever to go see a doctor. It takes forever to get an appointment. A lot of times you can't get an appointment. A lot of times people have to end up going private because they don't or can't wait 6, 7, 8, 9, 10 months, 12 months to go get whatever operation it is that they need. Everyone agrees with this. We are having a lot of issues in Canada, and especially when you're bringing in, there's a lot of immigrants that are coming into the country. Nothing against immigration, but it's going to, if we're not adding doctors, but we're adding people, it will cause stress. Undoubtedly, this is
stress on the system is unbelievable.
It's crazy. Ever since COVID, like everyone agrees that there's a lot of stress on the healthcare system here in Canada. Has that impacted how group insurance works at all, or not really?
Not really.
Okay.
It hasn't really
Why is
changed
that?
the context of group insurance, because unfortunately the group insurance can't have anything to do with the stresses on the system. I often say to my friends, thank goodness I'm not a politician today, because I wouldn't want to have to deal with this. I don't care what level you're at. It's a really tough situation. One of the things that One of the things that's interesting about that, though, is that a lot of people say, well, I've got a group insurance plan. How come this isn't covered?
Yeah.
And then you have to get into the nuance of what a group insurance plan is allowed to cover versus what the politicians want us to perceive the national or provincial healthcare schemes to be covering. So a lot of the time, a lot of things that aren't covered are not covered because either the federal or provincial jurisdictions won't allow it to be covered, or the employer says, well, this is too big a risk, so we can't offer this kind of coverage.
It's too expensive.
It's too expensive. There are certain drugs that are too expensive.
Okay, can you give us an example?
God, I was hoping you wouldn't ask me this question. One of the foremost example has to be the medications for erectile dysfunction. Thank you for this segue.
Okay, cool. Yeah, let's get into this. This is interesting.
Just get into the meat of the matter.
Yeah.
This product is not covered by group insurance plans, nor is it covered by formularies on the federal or provincial level, because it is not necessarily a medication that is going to be beneficial to the longevity of a person's life.
That's debatable, but continue.
I'm not talking social life. I'm talking health life wise. So this is just going to be great. So those are certain examples. That's a very, very specific example, but there are deeper discussions than that. But it's the most fun one to talk about. There are certain medications that are being represented to both federal governments and the provincial governments to be included, if you will, on their formularies so that these drugs can be covered. And these are important, very, very important life-saving drugs. These are drugs that not only improve your lifestyle, but they can save your life. The names of which are not pronounceable, and they're 15 syllables long, so I won't even get into that. Mm-hmm. But there are certain very responsible companies, both in Quebec City and in Ottawa, that are making representations to the various health protection branches of Health and Welfare Canada or Santé Quebec to have these medications covered. And then what happens is that once those medications are on the various formularies, then the insurance companies are allowed to cover them. It's kind of an odd marriage, if you will, odd relationship, if you will. So what you can get is, I think one of the meds that a lot of people know about today is Remicade. Remicade is a medication that is used for rheumatoid arthritis. That is one of the more popular, that is the way Remicade was initially developed for. That's what it was initially developed for. Remicade has other indications today, but the annual expense for Remicade, which is an injectable, so it's a biological drug, is around $40,000 to $50,000 a year.
That's a lot of money.
That's a lot of money. So obviously the federal and provincial formularies are a little bit reticent about putting that onto their listing because their exposure goes up, astronomically. The insurance companies, on the other hand, would also therefore have to put that on their list of covered medications. Yeah. What happens then is you get into the whole discussion about who the hell's going to pay for this med. Uh-huh. If you have an employee group of 30 people or 25 people, and you have one person that is claiming a $45,000 drug every single year, and usually in these kinds of cases, these drugs go on for quite a number of years, if not forever, regardless of the potential side effects. This can create an enormous strain on the group insurance plan. So what the insurance industry did was they created pooling. And what that essentially means, it's a very nice way of saying everybody pays into a pot.
So it's not just the loss ratio for my employees.
Exactly.
It's a loss ratio for everyone that's on the plan.
So regardless of which insurance company you're talking about, they all have pooling. And that's how you
I didn't know that.
that's how you mitigate that kind of a risk. Now, in the province of Quebec, speaking specifically to the province that I live in, there is a pooling that the drug insurance plan, which is La RAMQ pays, which it directs a certain pooling at certain levels. There's different pooling thresholds. Like if you're up to 25 employees, any drug that costs more than $10,000, anything over that $10,000 is pooled.
Got it.
But it's covered by the government.
Yeah.
But we all pay into that pot too.
Yeah.
So all of a sudden your group insurance premium, that wonderful little premium that you pay, some of that cost, and it can be in excess of 20 or 30% of the total premium, is actually pooling premium. Because the incidence of massive drug claims it's beyond comprehension. And there are meds out there that cost $1 million a year. And they are on formularies. They are life-saving, but they are on formularies. And there are many, many, many plans that have to cover those drugs. So it's pooled. You can't.
So is there really an advantage to, I don't say advantage to come across, it's like not claiming. I have a super young staff. Typically speaking, if you're going to go with the law of averages, younger people, I would imagine, claim less than, let's say the average age of an office is 28 versus another office where the average age is 55. The law of averages, I'm going to guess the 28-year-olds are going to claim less than the 55. Right?
On drugs.
On drugs. But overall too, or is that the case or not? Really?
No, it's an interesting, there's an interesting dichotomy there because meds, I think the last statistic I saw was 85% of all medications are claimed from 55 and over.
Mm-hmm.
So us old folks here are really screwing up everything for everybody.
Yeah, you guys love your drugs.
Exactly. I want meds. But the younger, and no, there are no microdosing medications that are yet covered because they're not recognized by the formularies.
Yeah.
However, there are a lot of people today in the younger age groups. There are a lot of people that are very aware of alternative treatments such as osteopathy, chiropractic, physio, massage, licensed massage. And these are
no happy endings.
No. I knew we'd get into that too. Somehow these conversations always
massages are not covered.
No, they're not. No, and you have to be accredited by the association to be able to get this claim paid. Okay. But these alternative sources usually supplant some medications, and so you won't necessarily see as many meds being covered or drugs being covered as you will other services being covered. That being said, on average in a group insurance plan, anywhere between 65 to 75% of the group insurance cost driver are medications, regardless of the age. Because everybody's young and everybody's bulletproof and nobody's going to make a claim. But that's not what really happens.
So with the pooling, because healthcare costs are going up roughly 15% per year in Canada.
Yes.
And it's even worse in the US, but it's high everywhere. So let's call it 15%.
Yes. That's a very accurate figure, by the way.
Yeah, because I remember our lunch that we were discussing. It was you who told me that. And so 15%. So as an employer offering the employees a group insurance plan, we can also expect, the employer can also expect for premiums to increase next year because of the pooling. Like costs are going up 15%. If insurance is all going into a pool, I mean, rates would logically go up next year as well, right?
Yeah, here we go. Yes and no, because in a group insurance plan, what you will have is part of your risk will be pooled.
And you said how much? 20 to 30%?
20 to 30% of the premium is going to pooling. This can be a large case pooling in terms of catastrophic loss.
Yeah.
It can also be out of country. This can also be the travel and emergency medical portion.
So for the pooling, let's just say, so KBD, no one makes a claim in the pooling section, but for whatever reason, a bunch of other companies, they make a bunch of claims. So that pooling part, the 20 or 30% of my premium, if it happened to be a bad year for for losses, I'm talking Quebec wide, that part of my premium would also go up.
Yes.
Right?
Yeah. Your pool is going to account, your pool premiums are going to go up by anywhere between 5 to 12% per year. It's going to happen.
Got it.
And that represents probably 30% of your health insurance premium.
Got it.
So
the other 70% is the part that, as the employer, I'm in charge of.
yes,
More or less.
More or less. I'm speaking only about the net premium that is left to pay claims. And there's a thing in group insurance. It's a rather funny word. It's called credibility. And what that really means is the believability of the claims that you as a specific corporation are making. And the cred is usually in a smaller group, 60, maybe 70% over time. It can get higher depending upon the stability demographically, but it's usually around 60% to begin with. In very small groups, it can be 30 or 40%, which means you have no control over your claims, and you have no control over your premium, because 70% of your premium is based on the pool.
So what would
if you don't claim at all, it's too bad, so sad.
What would you say to? It is a touchy subject, and it's a topic I want to touch on. As an employer, obviously, I'm going to look at it through the lens of an employer.
Yes,
I own a company. Let's say, for example, that I'm looking at my policy and I'm looking at all the claims that are being submitted, and my employees are claiming a lot. Now, by law, I know that the insurance company, we won't know who's making the claim.
no, you won't.
The insurance company is not allowed to say who's making the claim.
Absolutely not.
So as an employer, I don't know who's making the claims. Maybe it's one person, maybe it's two, maybe it's a bunch that are making a pile of
Unless it's you.
who could be me, but who knows, right?
Right.
As an employer, what can I do to get my group insurance rates under control? But without pissing off the employees. Now, we had this conversation ourselves, about our plan here, and we give a very good thought. I like to say, but
yeah, you do actually. Relative to the marketplace, you're right up there in the top round. I'm not trying to be patronizing here.
I appreciate
your plan.
Well, they appreciate
that. Your plan is pretty kick-ass.
But just back on the question, as an employer, what can I do? I know that there's too many claims coming through. I keep paying, because like at KBD, we cover 100% group insurance and we pay for it. Mm-hmm. So if a bunch of people are claiming a lot, and I go, Jesus Christ, man, I'm paying for all the premiums and the price keeps going up. Who the fuck's claiming?
Exactly.
What can I do?
It's really a great question. I sound so corporate when I say that, but it's super, because the answer doesn't lie with you. The answer lies with the broker that you're doing business with. So in this case, me.
Yep.
It's my responsibility to make sure that your entire employee population understands why prices are going up, why Curtis is concerned about the fact that the group insurance plan is going up in price, and what they can do to help control the costs.
Okay, so let me play devil's advocate. I'm an employee. My employer pays 100% of the group insurance benefits. What the hell do I care?
Why do you care?
Why would I care?
Well, then we get into a whole other discussion of what kind of an employee that is and whether that employee fits in your culture. And then you get into the whole question of internal branding, which comes back to exactly what you do and exactly what group insurance plays a part in, because your internal branding is manifested partly by the work environment that you create as it relates to employee benefits. There are certainly other things that employers do. They could have gyms, they could have family days. I don't know, maybe they even got like golf simulators or something like that. Who knows? But there's always an environment that they can create that will make things more positive. And, that comes from the top down. But the responsibility of sensitizing the employees, especially when you have a situation where the employer is paying 100% of the cost, is you've got to get the employees to participate, to have some skin in the game. And that's normally done by sharing what they call the co-insurance factor, Like instead of paying medications at 100%, which means the employee has to see a thing, maybe the employee should be paying 80, or the employee should be paying 20% or 10% of that medication, just to have some actual monetary skin in the game. It's not going to stop them from claiming, but they're going to be aware of the fact that there's a group insurance plan.
So it's to change the incentive, which will most likely change the behavior.
Exactly. If you have a deductible of $250 on your car insurance, chances are your premium is going to be significantly higher than if you have a deductible of $500. And now
I'll think twice about claiming.
Exactly. And I'm not in your business, but I kind of get the game, and that's how you not necessarily mitigate risk as much as sensitize the employees in your case to having skin in the game. All of a sudden, I've got a $500 deductible. All the first $500, that little ding is not going to come out of the insurance company's pot. It's going to come out of my pocket.
That actually does prevent a lot of claims, which over time actually does help keep their premiums reduced as well.
Yeah.
But let's say for fire theft, vandalism, glass breakage, someone comes and breaks your window or something like that, or whatever, scratch on the side of your car. If it's going to cost you $700 to fix it, like your deductible is $500, we'll tell them flat out, it's not worth it to claim for $200.
100%.
And it's going to be a claim on your file.
100%.
You have two camps of people. You have one camp that says, I get it, doesn't make sense to claim here. You have the second camp that says, what do I have insurance for?
Exactly. And that's why it's as though we rehearsed this, because why have I got insurance then? Well, you've got insurance because what happens if you're in a major car accident? What happens if something very significant happens to your health? That's why you have insurance. Insurance, regardless, whether it's a general insurance product, like any one of the products that you sell, or any one of the components of a group insurance product that I sell, what are we really insuring? Are we insuring a $65 medication claim? Not really. That's cash flow. What we're insuring is the major stuff. And what no one realizes is how often that major stuff occurs. That's why you buy insurance.
Do you have some stats on there? Like example, a disability claim? Like how many, is it 1 out of every 1,000 people will claim? Like, do you have stats on that?
Oh my goodness. That's a hell of a staggering question to ask, because the numbers change constantly. I can only tell you from a very broad perspective that there is not an insurance company in Canada right now whose long-term disability block of business is acceptably profitable.
Wow.
It is staggering. And that, I don't care which insurance company you're talking about. And that has happened. That has been happening. It's become a little bit more acute in the last few years because of the impacts, the unanticipated impacts of COVID. No one realized the emotional stress, the push-pull about working remotely, going back to work, getting into a remote work kind of a mentality, coming back to the office. There's a balance there that everybody's still chasing around. There's a lot of people that say, no, I love to come to work. I just want to get to work. I want to get back to the way things work. There's also a lot of people who don't feel that way. And so there's a balance that you have to find between those two. That's impacted.
Why do you think that is? Why do you think there's a lot of people that don't feel that way, that don't have that eagerness to get back to the office?
Because they never realized how good, how important, I should say, the life-work balance really was. And it's a heavy-duty subject to get onto.
What do you think about this? Is a fact. The golf courses have exploded in popularity since COVID. Number one, because it was one of the only things that people could do, like while during COVID.
Yeah, but that created a whole other disability because everybody's gaming into the tank.
But there was a golf course. Now I don't have data on this, but there was a golf course owner, and he was talking. He goes, since COVID, he's having record year after record year after record year. And he goes, Thursday, Friday afternoons, 10 years ago, we're never busy. He goes, the golf course is packed. People work from home. A lot of times they'll take that Friday afternoon off.
Yes.
And they'll go play golf.
Yes. And in certain work environments, that is not good.
Yes.
In other work environments, that is not only good but healthy. But the big question is, one, does that kind of a decision compromise the efficiencies and profitabilities of the company? Is that person doing their job in the other 4.5 days a week? If those two answers are no, then the issue has to be addressed. If, on the other hand, the employer is saying, hey, listen, you know what? If you want to take Wednesday afternoons is a much better day to play golf than Friday afternoons. But if you want to take Wednesday afternoon off and go play golf, and you're still getting your job done, and you're creating a situation where our bottom line is not being impacted whatsoever, your clients are being taken care of properly, regardless of what the job is. Doesn't matter what you're in. It's more acute in the service industry. Then you know what? More power to you. Go play your game. Hopefully you play well, and you break 80, maybe. But there are a lot of businesses that can't do that. Or there are even a lot of parts of business.
As soon as you start doing that, you get that attitude. It's just like, hey, just make sure that you're getting the job done. I mean, give an inch, take a mile. That's what ends up happening. That is what's happening now. And a lot of companies who are struggling to get employees back, number one, they're walking on eggshells. And number two, it's like, okay, I'm being careful what I say here.
No, I know where you're going, because what you're really talking about is a period of adaptation, and you're also talking about, first of all, the what I like to call is the emotional maturity of an individual.
Yeah.
If you've got people that are going to abuse that situation, you know what COVID has done? It's probably brought that to the surface.
Yeah.
And maybe what you've got is a situation that needs to be addressed, or any employer has a situation that needs to be addressed on a much bigger scale.
Yeah.
There are definitely businesses that will be compromised by a more flexible schedule.
Yes.
And there are also, then you get into the whole discussion of benefits and internal branding, whereby you have a situation where the individual who is doing the work-life balance argument, or giving the work-life balance argument, isn't really giving valid positions as to why they shouldn't be in the office 3, 4, or 5 days a week.
Mm-hmm.
And if it's compromising the company, then that issue has to be addressed. But on the other hand, you may have a situation where a manager may be able to speak to a certain sector of the work population within that environment and say, you guys need to be in the office 5 days a week. Others don't. But then you get into the whole discussion, well, if they're only in 3, how come I have to be in 5?
Yep.
So it becomes quite complicated. It is not, thank goodness I don't manage a whole bunch of people, because it is not something that I would want to have to deal with. The best we can do is hope that there is a level of emotional maturity that is achieved, where people recognize that they have a job, and they're damn lucky they have a job, and they're compensated.
But they don't think like that, though. That's not how employees think.
Unfortunately,
there's a level of it. You can't go too far to one side where, like, an employer, I don't think an employer should have that attitude where it's like, you're lucky that you can have a job. But then there's also the complete other end of the spectrum where it's an employee is just entitled, and
self-entitlement. Yes.
Like, the entitlement is crazy.
Yeah.
And I find entitlement in particular for people coming out of university is immense, because they're just brainwashed in university that, you know, the world is a bad place, and, you know, you have to, and we're very picky hiring students.
Yeah, well, you have to be.
They're very, like, ideological for nothing. They come in, and I remember once we hired this, I didn't hire her, this is when I first started. We hired this girl, and she was studying, I swear to God, this was the field she was in, employee rights. What a mistake that was to hire this type of person, because no matter what you're going to say, it's always an argument to get something done. The entitlement is just insane. And then they don't realize, they think that the world of school, they think that the world of theory is how the world actually works. All this theoretical nonsense. Some of it can be brought over to the real world, but most of it does not. And they don't realize that, and they have to learn it. And a lot of them don't end up learning it. They're just stubborn, and they think, well, you know what? This isn't what I learned. I'm going to go work at another company that will give me exactly what I want, that will give me a 40-hour work week, that will give me muffins at lunch, that will give me this, will give me this. Never once do they ask the question, like, what can I contribute to the company to help grow this company? There's just a lot of entitlement that finding with younger people. A lot of them are not, but the ones that are coming out of the education system are, in my experience. And the ones that we've hired, we have a lot of young people. The best employees we've hired, none of them have a bachelor's degree. None of them.
You're getting into an area that is so far removed from group insurance.
Yeah, I know.
Fascinating. But that's okay, because
we always go on tangents.
Yeah, you know what? It's a soapbox that
Yeah.
somebody needs to stand on that soapbox, because there is a bigger problem with those individuals that are coming out of the educational system today, and it's not because they're not well educated. It's because
They're brainwashed.
There's a little bit of life experience that may be missing.
Yes.
And perhaps some of those life experiences and some of those values are not necessarily always coming from being brainwashed at the university.
But from the teachers too. Most of the teachers have never held a real job in their life. It's all theory. They just read books. They don't know. They've never actually taken what they've read and applied it in real life. Some of them have, and typically speaking, those are...
Be careful when you talk about teachers, because teachers play a vital role in our society. The problem is the way...
I don't think they do anymore. I disagree with you.
You see, the thing is, at the university level, teachers are addressing situations that very differently than in the primary and high school level.
Like what?
I would not want to be a primary or a high school teacher today for love nor money. It's a tough job.
Yes.
Why? Maybe that has to do with influences outside of the school, which is a whole other subject. That's a whole other podcast.
Yeah.
Once you get into the university level, you're then looking at a situation where maybe some of the theoretical aspects of teaching are not necessarily reality.
Mm-hmm.
That is a whole other subject. And that is something that can create a bit of a monster that you're dealing with right now.
Like most of my teachers, I went to GMSB. I was a terrible student. I went to GMSB, and most of my teachers had never worked in the private sector, and they were teaching me business school.
There's a missing link there.
Yeah.
And Jomo is a great school.
Yep.
Academically.
Yes. Yeah.
And clearly I know some people that went there if I call it Jomo.
Yeah.
Wasn't me.
Yeah.
Des Hotels, again.
Yeah.
Concordia, various aspects of the various curriculums in Concordia. There are a lot of talking about those two universities more specifically, because I can speak to them with some degree of knowledge. There is a world of difference between the theoretical and the practical.
Yeah.
And I think that hopefully there can be other influences that create better values in the people, in the young people that come out of those programs. Not all of them.
But I just think right now...
Don't see them all with the same brush.
You're right. You're right. They're not all like that. You're absolutely right. But I think you're naturally going to get an imbalance when 95% of the teachers lean one way politically, and the way that they lean is to the left politically. And typically speaking, people that lean more to the left, like higher taxes, they like more government intervention. They're left leaning. There's no right. It's like you're not even allowed to say I'm a capitalist on a university campus these days. But so people going into business, you need to have that mindset. I'm not saying it's right. I'm not saying it's wrong. It's just, if you want to work in business, you need to have a capitalist mindset, especially if you want to be a business owner. There's nothing wrong with that. But the fact that the school, all I'm saying is this, the school and the environment at a school does not provide that environment. You're not allowed to think like a capitalist. You're frowned upon. You're whatever they want to call you. You're a Nazi or all this kind of stuff. But am I explaining myself clearly?
I get what you're saying. I mean, I'm a pure capitalist, and it's funny too, because when I present my group insurance plans to people, I do it from a very capitalistic perspective.
Of course,
because I have to.
As you should. You're talking to an employer who's trying to cut costs, or they're still trying to give a service or a product to the employees. They want to take care of the employees, but at the same time, they're going to be cost conscious. You need to address those.
Exactly. And then you get into the whole situation from the capitalist perspective of the group insurance plan of well, why isn't this covered?
Yeah.
So there you get a little bit of that self-entitlement again. So it permeates all age groups to one degree or another. I can't argue with you at all to any degree in terms of what I know about the university students, because my perception, which is obviously tainted because I have some very specific examples of young people that have come out of university, and they are all remarkable, sensational leaders that are very aware of the capitalist impetus and profitability, etc. So they're very sensitive to that. Be very refreshing for you to meet these people. But on the other hand, the group insurance plan isn't going to necessarily be or the group insurance plan, I should say, has to be part of the reflection and the values of the business owner. So when we build a group insurance plan, we talk about things that are, in the end, I've never used the expression before, but very capitalist.
Yeah.
Very cost driven. And we have a tendency, or I have a very clear tendency, to make sure that everyone understands why a group insurance plan costs what it costs. You know, there's an expression in your business and in my business that if you live by price, you die by price.
Yes.
And it applies universally.
Yep.
Okay. And in my business, you can always find a situation where a provider and or a broker will pander to the price-sensitive individual. But that will end up sooner or later biting them in the butt.
Yeah, my father's always said the same thing. He goes, if you sell, same thing for commercial insurance. He goes, you sell on price, you're going to lose on price.
Exactly.
Because you can't always be the least expensive option. That's just how it works.
Exactly. The father of an old friend of mine used to say that, a liter of milk costs about $2.
Yeah.
If someone comes along and says, I can sell you the same liter of milk for $1.50, you better smell it first.
Yeah. Which makes sense.
And that's really the way of the world. And it takes time. And that whole philosophy, it applies to everybody. Sooner or later, these young people who are full of self-entitlement are going to face the realities that that's not exactly the way the world works. Mm-hmm. And there's going to be a balance. So you get back to the whole question of work-life balance. And this whole COVID thing has forced the entire world to rethink how things are being done.
Mm-hmm.
And I see it every day. I see it with every single one of my clients. And I also see it within the risk management within the insurance industry, because how do you manage risk when you've got 65% of your employee population is working 3 days a week from the house? That's a whole other risk than having everybody in the office. People don't realize that. And so there has to be a pricing factor.
Don't we have to, was it you telling me this? For employees that work from home now, if they injure themselves at home during work hours, it would be a CNESST claim. Was it you telling me this?
We didn't get into the CNESST situation. We didn't get into any of that workman's comp discussion.
That's a workman's comp.
It's a workman's comp issue, but it's gray at best. I can talk about gray. It's gray at best, because if it's a work-related injury, then how could it be a work-related injury if it's at home? Did you fall off your comfy chair?
Well, that's what I mean. Like if you're sitting there working on your laptop and you happen to slip and fall in your house,
Mhm.
how would that implicate the employer? It doesn't make any sense.
It's a really tough discussion. I wish I had an actuary with me from disability to be able to talk about something like that, because honestly, who's responsible for what?
But no, that's ridiculous. It's completely ridiculous. You're getting the privilege to work from home, and if you happen to injure yourself while you're working from home, like too bad. You're in your house.
To me,
you can't have your cake and eat it too.
Exactly.
You want to work from home.
Yeah.
It's absolutely ridiculous to put the liability on the employer. That's bullshit.
Which is the workman's comp claim.
But this is how it just goes back to the same thing again. Give an inch, take a mile. It's like
well, you see, but that's where you get into another area, because, and I can see that. I can see the actuary shuddering right now. To me, that may be something that would be looked upon as a disability insurance claim coverable by a group insurance plan.
That I can live with. That's fine. It's like they have
that's a pooled benefit. You can live with it in the sense that it's not
that part. Like if you injure yourself, disability claim is a disability claim, regardless of where you injure yourself. Correct. Yeah. So it's that I can get on board
unless it's unless it's a workman's comp claim. That's CNESST claim in Quebec. Yeah.
My head's okay. Let's
too many
acronyms
here. Yeah.
Talk to me about your business. Like your business.
Levee Future Planning was born 45 years ago.
Okay.
And back then it wasn't called Levee Future Planning. It was just Victor Levee. And he developed this philosophy over time that was born out of the evolution of recognizing what risk really is and understanding what human life value really is. We all almost need violins here. What's real in terms of financial security planning, and how can what I provide in terms of products and knowledge and service help people be safe and secure in their financial planning. And I very specifically use the term financial security planning, because everybody out there who manages money, everybody out there who talks about tax angles, that is an accountant, that is a fiscalist, whatever, they all talk about financial security. But the reality is the products that I provide have a level of guarantee and a level of security that no one else can offer. So that trickles down to the individual products, which we're not really talking about today, but it also applies to the group insurance products. Because what we're doing on a group basis is we're providing grouped financial security planning to the principals, the owners, and all of the employees within that organization. And it's way beyond just a drug insurance plan. It's way beyond just a dental insurance plan. It's the $450,000 US emergency medical claim that's covered at 100%. In the specific context of group insurance, it's so vast, and yet it's fairly obvious.
Yeah.
In a group insurance plan, all group insurance plan will have a component of life insurance. That life insurance component can be a fixed amount. It can be a multiplier of salary, 1 times annual earnings, 2 times annual earnings, 4 times annual earnings, whatever.
So do I need, as an employee, to purchase my own life insurance policy if my employer is already giving me a life insurance policy
within the
group plan?
Absolutely.
I still do.
Absolutely.
Okay, why?
Because you probably won't be with the same employer for your entire life, and you will lose the group insurance. Now, that group life benefit may be convertible, which is depending upon the contract and the company, but you cannot guarantee that you will always have. If you're earning $100,000 a year and you have 2 times your annual earnings, you have $200,000 life insurance. Well, I'll just include that in my financial security plan. No, that's the bonus. Okay, it's not the bonus for you if you croak, but it is the bonus, because 1, 2, 3, 4 years later, who knows? That $200,000 may not be there anymore.
Okay.
So you absolutely need to take care of your own personal products with individual insurance products. Your personal planning, with individual insurance products, regardless of what they are. You absolutely need to do that. The other component of group insurance that's super important that nobody thinks of, there's two. There's the critical illness, which I talked about earlier, about that. That is a ridiculously undersold benefit. The incidence of critical illness are way higher than life insurance. So critical illness incident claims are way higher than death, to put it blunt.
And the critical illness, just for my memory, is more or less sudden and accidental. A critical illness claim can turn into a long-term disability.
Yes.
Got it.
And then the other component of a group insurance plan that's also mandatory, actually, is the long-term disability benefit. And that's the replacement salary. That's mandatory, yes. Unless you have your own personal disability insurance outside of the plan, then you can get most, if not all, of the long-term disability benefit. The acronym is LTD.
Yeah.
You can get that waived.
Got it.
Because you're not going to be able to double dip. You're not going to be able to claim from two sources.
Got it.
Because the government limits the maximum that you can claim from disability insurance. Rule of thumb, if you have a non-taxable LTD benefit, it's 85% of net income or 75 to 80% of gross income if the benefit payable in the event of disability is taxable. So taxable benefit, about 80% of your gross income.
My head's spinning. You're making my head spin.
See, well,
So,
there you go.
so here, let me.
But disability is the most important component.
Okay, so disability. But do you have, okay, so let me, so we have the group insurance side of things. I don't want to get into the weeds too much here, but I do have this next question. Excuse me. Can you tell us like a hack, and this can be from the individual insurance products you sell as well. So can you tell us and simplify for us a hack that someone who has a bit of money, so an employer or an employee, is there a hack that you use often for some of your clients? And about a hack, I've asked you the specific question. Let's say I go to purchase a life insurance policy and then I can borrow against that life insurance policy from a bank, for example. Is there anything that you see often when you're providing these products to your clients?
There's two answers. There's the corporate answer and there's the individual answer.
Let's go into both.
The corporate answer is a little bit more esoteric, but it is a very, very, very misunderstood but highly powerful hack. And what you do in a nutshell is you take money or tax exposed money in your operating company and you move the money to a holding company. Again, it is still at this point tax exposed. You take that money and you put it into a life insurance policy. The most effective form of life insurance that you can put that into is a policy called a whole life participating policy. There are a lot of other components or pieces to that puzzle, but what you've essentially done is you've taken tax exposed dollars, moved it into a vehicle which can give you access to a lot of that capital tax-free, but it also means that the next generation will get most, if not all, depending upon the age at which you die, that money tax-free. So you've taken tax-exposed corporate dollars and delivered them to the next generation on a tax-free basis, subject to adjusted cost basis or calculations. Okay? So on a corporate basis, it's an extremely powerful tool. The particular product that I provide that, or the umbrella that I use, is called Safe Capital Plus, because we build the components into it whereby you can leverage it. You can either upfront leverage it, which is a little bit more risky. You can back-end leverage it or not leverage it at all, and just use it as the intergenerational asset transfer. On the personal side of things, you can do it as well, but the one spin that's missing is that you're not taking a taxable corporate dollar and turning it into a tax-free dollar. What you're doing is you're taking your after-tax dollar and you're creating a much larger estate. So you're buying a product. So your $10,000 that you're putting into the product every single year is creating a $2 million tax-free benefit to the next generation. Right away. Boom. Right off the bat. So 10 grand gets you 2 million tax-free.
Can you explain that?
That's the premium for a life insurance policy, and that's death benefit on a tax-free basis.
So I have $10,000. I go purchase a $2 million life personal side.
Personal side.
So I have 10 grand after tax dollars.
Yeah.
Fine.
Yeah.
I go purchase a $2 million policy. That would be a whole life policy, or
it would depend upon your age, but it could be anywhere between a universal life policy with no cash value to a cash value policy. Depends on the contract. Depends on the age. Could be $50,000 a year. It's essentially just as
okay. That 10,000, that's per year.
That's per year.
Got it.
It's 10,000 per year.
Per year.
If you take the
for how long until?
You can usually be comfortable saying a premium period of anywhere between 10 and 15 years up to the trick.
Okay.
And then it's completely paid for. So your 10 grand really, really costs you, because the top marginal rate, the real top marginal rate is about 40%. It's not 53%. Just the top dollars at 53%. Nobody pays 53%. So let's say you've got a $10,000 premium. Well, that $10,000 premium really cost 15 grand, 16 grand. Okay? So that's your real cost. So 16 grand pre-tax, 10,000 after tax buys you a couple of $1 million of insurance.
Is a life insurance policy tax deductible?
No, it's not. The only time an insurance policy is tax deductible is when it is used for a collateral term insurance loan protection. It's a very specific thing, and it's only the net amount of cost. It's a really dirty subject. Don't go there. Yeah. It's very limited.
Okay, so but for this, okay, I want to stay on this part here because can you simplify that even further? Because I'm trying to understand myself. So I get my after tax dollar. I
buy a life insurance.
Go buy a life insurance
on an individual personal basis.
Yeah.
Okay.
It's for my family or whatever.
Yeah.
What's the step after that?
You buy the life insurance policy. You put it into place. You determine the beneficiary designations.
Yep. My kids with.
Exactly. And then the policy is in force. Pay the premium, depending on the product you buy, you pay the premium for anywhere from 10 to 15 years. And then you stop paying it. That $2 million policy is probably grown at that point to $2.5 million. Your internal rate of return on the death benefit on the net of a personal life insurance policy is probably around 3% net after tax. So that's a 6% gross return. That ain't bad. 5% gross, that's not bad. Internal rate of return. And then you designate the beneficiaries. Then you, unfortunately, at one point, probably croak.
Yeah.
You croak.
And
then you die. And then the life insurance policy is paid out tax-free to the designated beneficiaries.
Interesting.
Simple.
So I always thought with the life insurance policy that I think there's two ways. So let's say, for example, like I can purchase right now, so I'm 34. If I wanted to, I could purchase a life insurance policy that expires in 10 years. If I don't die within the next 10 years, the insurance company gets my money.
No, not quite. That's called 10-year term. What happens is at the end of 10 years, you have the option to renew it at a much higher price. And that goes usually to the ages of either 75 or 85. And every increment of 10 years, it goes up. It gets ridiculously expensive.
So, but if I'm only paying, so let's just go back to the numbers that we were using. So if I'm paying $10,000 per year for, let's call it 15 years, so I paid $150,000, mm-hmm. and the insurance company, when I die, is going to give me $2 million or 2.5. Let's call it 2.
Okay.
How are they making money on that?
Because you're not the only person that's paying $10,000 a year into a pot of money. And where the insurance company makes their money is all of those premiums go into a pot and they invest it. And they have to invest it, but they have to keep it very conservative.
Yeah.
Because there's actuarial calculations that are included in all of that. Yeah. What are the odds of a male age 34 in perfect health dying this year or within the next 40 years? And the actuarial calculations apply a price to that. That's called your life insurance premium. And that's where they determine regularly priced product versus rated product versus declined product. The insurance companies manage the risk or mitigate the risk that way. In simple terms, that's the way it is. And all of that capital the insurance companies collect stays in a big giant pot. And in Canada, I cannot speak for the United States, but in Canada, there has never been an insurance company that has ever defaulted on a legitimate death benefit claim. There was one once who went bankrupt, but within 6 months, it was swallowed up by all of the other large insurance companies. So it never missed a beat.
Yeah.
Certain people of a certain age will remember that. But there has never been an insurance company ever in Canada that has not paid a legitimate, non-fraudulent death claim, period, ever. There have been investments that have gone into the tank. There has been cryptocurrency that's gone up and down and all over the place. There's been gold stocks that have not necessarily been real. There's been a multitude of those things out there. There's Ponzi schemes and fraud schemes all over the place. An insurance company's promise is etched in stone. Like we say in Quebec, c'est dans le béton. And it's a promise, and it's a promise that every single insurance company always meets, period. So it's something to take into consideration. It's like when you buy...
What do you think would have happened if in 2008 AIG went under? Do you think insurance companies would still have the same reputation as they have today? Because I agree with you, they have a rock solid reputation.
AIG was one of the two companies that I was thinking of, and in fact, the principals of AIG in Canada, their plan B was brilliant. They essentially became BMO Insurance.
Yeah. And
they never missed a beat. And credit where credit is due. The senior management of AIG never ever created a concern within any of their policyholders that any of their policies would not be paid in the event of death, or in the event of a disability for that matter, or in the event of a critical illness for that matter. I think they were selling that back then.
Yeah, 2008.
Yes. That was horrible. That was just horrible.
I was still in CJEP. I was 17, 18. So I didn't really understand. I had a good idea of what was going on, but I didn't really understand.
Yeah.
And it's interesting to always look back on that stuff, though. What's what do you got planned for your business right now?
Well, it's a pretty cool business because what we're doing a lot of now is we're reviewing a lot of our group insurance plans with our clients to make sure that they're actually getting the absolute best bang for their buck.
Yeah.
But that gets me into a whole other discussion on, again, getting back to this, if you live by price, you die by price.
Yep.
Scenario. So we're sitting down with all of our group clients and we're reviewing their entire programs to make sure that they understand why they're paying what they're paying. And in some cases, it has come to light that certain traditional insurance companies are providing a product and have been providing a product that perhaps is not necessarily bringing the best possible value to that company, to the client, that company being the client in question. And you've got to address those issues. But again, we're not addressing those issues on the basis of, I can get it for you cheaper, because anybody can get it for you cheaper. That's not why you change carriers. And if you change carriers for that reason, fundamentally in the long term, you're making a very big business mistake. It's not an intelligent business decision. It's anybody who sells anything, anybody who manufactures anything understands that.
Yeah.
Conveying that to the employees, conveying that to perhaps non-entrepreneurial minded individuals within an organization is the challenge.
Is it fair to say that in the group insurance space, if you remain with the same carrier over time, that generally speaking, not all the time, but generally speaking, it will lead to inflated premiums? So it's kind of the same thing. The reason I asked this question in commercial insurance, if you stay with the same insurance company and sometimes the same insurance broker as well for, let's say, 10 years, 15 years, the broker and the company can become I don't want to say lazy, but it's
Complacent.
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 That's a great.
Yeah, like so. Yes.
And if you're paying an extra 2-3% over 2 years, it's not the end of the world. 2 or 3% more than what you should be paying compounded over 15 years. All of a sudden, that's a lot of money. Would you say it's the same thing in group insurance?
Almost. The independent, like I'm an independent broker, so I'm going to be selling whatever or putting into place whatever product fits the client's needs. Period. I don't care which company it is. That the comp that I'm getting is not usually enhanced by having more compensation with one company or another. There are certain companies that do try and create incentives for you to maintain and increase your premium with one particular company, and that's manifested in bonuses at the end of the year. I disclose all of my comp on a group insurance plan to all of my clients, including the base commission, which varies from client to client depending on how complicated they are. Like if you're like a really complicated client, I'll jack your commissions up like through the roof. So be nice to me. But there's also a bonus factor in there, and I will disclose all of that. Don't know a lot of independent brokers who do that. Don't know of any. I know one of the larger outfits out there does it, but I don't know any smaller brokers that do it. And so there is an incentive to remain with one company or to have a whole whack of premium, a whole block of business with one company. Where the insurance companies are in fault is the way they manage behind the scenes the money that they're collecting to pay claims. In a lot of cases, these insurance companies are not being transparent enough with where the money goes and where the money stays. Now, when you say that, most insurance companies are going to shudder, because what I'm suggesting is that insurance companies be more open with their holdings and profitabilities. And that's not really a bad thing, because you know what? Insurance companies have built these massive systems.
But what if, but hold on. But if, okay, let's take Sun Life. It's a publicly traded company. We can see under the hood. We can see all that information. So would this apply to Sun Life, or this would not apply to Sun Life?
They're a publicly traded company, as is Canada Life, as is Manulife.
What are they hiding?
There are mechanisms within the when you see the annual statements, what you don't see is the profitability of each silo. And that's where it becomes very, very difficult. And you're moving money from one silo to another. So it's quite complicated when you get into the group insurance market, because there is no question that these major insurance companies that have been providing these products for years and years and years have absolutely every right to make a profit. It's a lot. I'll get into a really ugly area here. It's a lot like a company that develops a new medication. They've spent $1 billion and $1.5 billion developing a med. They have a right to sell it for more than the generic brand. And so that's why you have generic protection. It's a very valid business position to take. A lot of people don't agree with that, but if there weren't a lot of companies out there developing these meds for the right reasons, you'd have a lot of sick people, a lot of dead people, you'd have a lot of mortality that'd be a lot lower, and your life insurance premiums would go up.
Yes.
And it's all, there's a correlation there. So on the group insurance side, yeah, these insurance companies have spent a lot of time building systems. And now what they're beginning to do is truly leverage technology and hone the systems, refine the systems, offer more value added, and make the overall group insurance offering a lot richer. So the value, dollar spent versus value received, is getting a little bit more in line with today's world. And that's because of technology. Now, there is also a whole school of thought out there which says, essentially, we could build a group insurance plan that is fundamentally a generic drug. So if you take a look at the cholesterol drugs, when they first came onto the market, The general term for them are statins. Cholesterol reducing drugs, when they first came onto the market 15 years ago, 20 years ago, out of the top 100 drugs that were claimed in any given year, the top 10, 6 of the top 10, 5 of the top 10 were cholesterol-related drugs. It was absolutely unbelievable. You'd see 15% increases in drug claims just because of the statins. As these meds fell off of patent protection, they dropped from the top 10 to the bottom 10, just because the generics came on. And the generics said, listen, we can do exactly the same thing with exactly the same efficacy at a third of the price. So the generic drug companies of the world came in and just moved the market, literally moved the market. In group insurance, you can do the same thing. Now, a generic drug isn't always the best solution. And that's where the broker comes in, who's trying to do the best job objectively for the clients. And because there are certain situations where the generic drug may have non-medical components to it that react adversely to an individual's condition. There are some meds out there that actually have a dairy, non-medical dairy component. If you're lactose intolerant, you take a pill with a dairy component in it, you're in trouble. Okay, and you can get really sick on it. Same thing on the other side of the coin. If you have a generic group insurance product, okay, which I call clear cost, it's very simple to understand. But is it the best solution in all cases? And the answer to that is absolutely not. You have to sit down with the owners and with the CFOs and with the HR people so that they truly understand all components of that product. And then we can make a proper business decision. So
how much time do we have?
7 minutes.
In the next 7 minutes, all you're going to hear is Levee Future Planning or Levee Direction Avenir. Because I do have a Quebecois component to my company. As a matter of fact, I probably spend 75% of my time there.
Yeah, you say that. Where'd you learn French?
I learned it because of the need to accept the fact that I was a unilingual Anglophone in a province that was 75 to 80% Francophone. And I found it to be an irreconcilable difference. So I said to myself, instead of being disrespectful, I'm going to learn French.
You speak a little accent.
Oh, are you kidding? Yes. Many of my French clients say, yeah, Victor, ton accent en français, c'est charmant. Yes. I get ribbed about it all the time. But you know what?
My French has gotten rusty. I did when I first started working here, because I was on the phones, and a lot of our clients still to this day, a lot of them are outside of the area of Montreal. You venture to outside the area of Montreal, a lot of spots, they do not speak English. Like,
What?
And so I was forced, it's the best thing that could ever happen to me. I was forced, absolutely, okay, I got to really hone down on my French skills now.
Yeah.
And my French got quite good, actually. Very, very, very good. And I've lost a bit of it, though, because I never speak in French anymore. I'm always speaking in English. I got to get back on the French trip.
It's interesting because I would probably say 60, 70, 75% of my clients are Francophone.
So your skills stay sharp.
Yeah, my skills stay sharp. And if anybody hears this, they're going to go, yeah, but you still make mistakes. And I do.
Of course.
And I even, when I'm presenting to employees, again, with the employee benefits package, you're talking about an internal brand, and I will come in and I will talk to the employees, and I will do the employee meetings in English and in French, and with no offense to the Office Québécois de la langue française, I will do franglais as well, because a lot of it gets mixed together. It's never done in a disrespectful way. Quite the contrary, it's done in a very respectful and mindful way, and it makes a huge difference.
Our office is pretty franglais, actually.
And
like Shamar does franglais quite a bit.
Yeah.
Shamar went to French elementary and French high school.
Yeah.
Yeah. So his French is like
it's pretty good.
No, his French is really good. His French is really
good. My kids were all raised within the mostly the French environment. Their mom was Francophone, and their high school was all French, and
that's one thing.
They shudder when I speak French. It's hysterical to listen.
But that's one thing in Quebec I don't understand is, so let's say, for example, you have two Anglo parents and this is coming as an Anglophone. If you have two Anglo parents, I don't agree, but that's not my kid, so they can do what they want, obviously. But send your kid to a French elementary school or a French preschool. And in my opinion, and I'm saying this because I was sent to an English elementary school and my French skills were not where they should have been once I graduated from high school. I should have been speaking at a much higher level of French, and I was not. I wish my parents sent me to a French elementary or French preschool, and not just like where you're learning French.
You're living French.
The playground is French.
Yeah.
The kids are speaking in French.
100%.
And if you do that, your kid, because you're going to speak to your kid in English regardless at home. English is a super easy language to learn.
Yeah.
Give your kid
Look
an
at us.
advantage.
We do it pretty well.
Yeah. Give your child an advantage. Send them to a French elementary school, or at least where they're hanging around children that are speaking in French.
Mm-hmm.
You're going to give them a huge advantage in life once they're done with the education system.
The value of being perfectly bilingual is massive.
Huge.
Trilingual today is even more powerful.
Yeah. Well, bilingual, and even if you're in Ottawa, even if you're in Toronto, even if you're, there's a lot of big companies in Quebec that work across Canada. If you can speak both languages, I agree with you 100%. You have a huge, massive advantage in business, just in life in general. It's
a really, really, French is a really cool language. And
it's hard. Though.
It's very nuanced. And
can you write in French?
And not well enough.
Yeah, me either.
No.
Me either.
I do depend on the various translation features.
It's so hard
of the computer these days. It's tough. It's tough.
Like even
it's a weakness that
it's a tough language to learn.
I own
it. Even in like I gave up a long time ago, féminin and masculin, and sometimes people be like, well, it's masculine because of the ers here, and you got to put this there, and the féminin because of this, that. I just go, guys, I just guess. Like, so
the best thing to do is read a couple of Shakespeare plays and then read some Molière, and you'll be fine. Yeah. There you go.
Yeah.
No, we've had a tremendous opportunity when I was growing up. I had a phenomenal opportunity to be exposed to both cultures. That exposure was extraordinary. I mean, playwrights like Michel Tremblay and these guys, they wrote in French and in English, and it was amazing for me to be able to learn contextually, and that's kind of what gave me an advantage over a lot of my peers who unfortunately aren't bilingual enough.
Yeah,
it's just plain.
Yeah, I agree. I will say and again, coming from an angle, I understand we'll call it Quebec nationalism. I don't see anything wrong with that, where if you come to Quebec, you should speak the language of the land. You should learn to speak French.
100%.
I agree with it. It's, I wouldn't like it if I was living somewhere and let's say it's all English and that you came to my place and you didn't speak my language. I wouldn't like that either.
I think so.
So it's like, I get it to protect the culture. I'm like one of the few, I don't agree with all of the language laws, but I get it. I honestly get it.
It's a rabbit hole that maybe we shouldn't go down because there are so many emotions that get into it.
Yeah,
I'm
an angle that's on their side actually. Like, I totally get it. You want to come to Quebec, adapt to our culture. This is how we live. You don't like it, go somewhere else. It's cool. I'm okay with that. Totally okay with that. Victor, what's plug your company right before we wrap it up. So give us a little give us a conclusion, a wrap up.
A wrap up. Yeah. What is Levee Future Planning? We are fully objective, and our goal is to make sure that we properly understand and address the financial security planning needs of each individual or corporation that we work with. And I believe that the key word there is objective. I'm not saying that the lawyer's position isn't valid. I'm not saying that the accountant's position isn't valid. I'm not saying that the fiscalist's position isn't valid, or I am not saying that the investment person's decision is not valid. But I am saying there is another component that has validity and needs to be considered in all aspects of financial security planning, individually or corporately. On the group basis, it's pretty simple. Sit down with the people that matter, which are your employees, and make sure that all of their needs are being addressed realistically and they understand why the program is in place and why it's structured the way it's structured.
Bang on. I appreciate your time today, sir.
It's been a pleasure.
For those of you listening, Freemium Podcast, Curtis Killen. I also happen to work in insurance, the insurance guys, home card business insurance though. So I'm the complementary side to Victor. Freemium Podcast, like, subscribe. Thank you very much, Victor.
Been a pleasure.